5 Warren Buffett stocks. Hey guys, today we're going to list top 5 Warren Buffett stocks. Let's get right into it. Number 5. Amazon. The first Buffett stock that investors can buy without losing sleep is e-commerce leader Amazon. Although Amazon's leading online marketplace is vulnerable to weakness during recessions, it is not the key to the company potentially tripling its operating cash flow over the next 4 years. Despite the fact that Amazon is expected to account for nearly 40% of all online retail sales in the United States by 2022, it is the company's higher margin ancillary operating segments that are driving its profitability and cash flow. For example, Amazon's marketplace's popularity has helped the company sign up more than 200 million Prime members worldwide. Amazon's subscription services generate approximately $35 billion in annual run rate sales, allowing it to reinvest in its vast logistics network and other high-growing initiatives. Number 4. Visa. Another Warren Buffett stock that investors can purchase and never have to sell is payment processor Visa. Despite being cyclical, Visa's long-term competitive advantages make it a no-brainer stock to own. To begin, Visa accounted for 54% of total credit card network purchase volume in the United States in 2020. The United States is the world's leading consumer market, and Visa has a 31 percentage point lead over its nearest competitor. Furthermore, it is the only payment processor that significantly increased its share of the US processing market after the Great Recession. In addition to the foregoing, the vast majority of global transactions are still conducted in cash. This should provide Visa with ample opportunities to organically expand into underbanked markets such as the Middle East, Africa, and Southeast Asia, as well as make acquisitions to broaden its reach. It is also worth noting that Visa is not a lender. Visa does not have to worry about potential loan delinquencies because it focuses solely on payment processing and thus is not required to set aside capital to cover potential loan losses. This is a significant reason why Visa's profit margins are typically at or above 50%. Number 3. General Motors. General Motors is a third Warren Buffett stock that you should never sell. Though economic weakness and historically high inflation threaten to dampen auto sales in the short term, General Motors' long-awaited growth catalyst has arrived. The electrification of automobiles for consumers and enterprise fleets is the long-awaited opportunity for the auto industry. With most developed countries attempting to reduce their carbon footprints, electric vehicles are viewed as a potential source of long-term growth. GM plans to invest $35 billion in EVs, autonomous vehicles, and battery research by the midpoint of the decade. According to CEO Mary Barra, GM plans to release 30 new EVs by the end of 2025. By the end of next year, the company expects to have 2 fully dedicated battery plants up and running, with over 1 million EVs produced annually in North America by 2025. Furthermore, GM has a significant presence in China, the world's largest auto market. General Motors has sold 2.9 million vehicles in China in consecutive years and should be able to capture market share in China's still nascent EV industry. Number 2. Bank of America. Bank of America is another Warren Buffett stock that can be purchased hand over fist and never sold. To continue with the overall theme of this list, short-term recessionary concerns should take a backseat to Bank of America's numerous long-term benefits. The beauty of bank stocks is that they benefit from the US economy's natural expansion. Because the economy spends a disproportionate amount of time expanding rather than contracting, Bank of America is able to expand its loan portfolio and deposits, which boosts its net interest income in the long run. Another noteworthy feature of Bank of America is that it is the most interest-sensitive money center bank. With the Federal Reserve aggressively raising interest rates to combat inflation, outstanding variable rate loans are becoming more profitable for banks and credit unions without requiring them to lift a finger. Because the federal funds target rate has been effectively at 0% for an extended period, Bank of America can expect a significant increase in net interest income in the coming years. This is also a company that has done an excellent job of encouraging its customers to bank online. As of the end of June, 43 million active users were banking online or via mobile, accounting for 48% of all sales. Because digital transactions are significantly less expensive for banks than in-person and phone interactions, the digital push has enabled Bank of America to consolidate some of its physical branches and reduce non-interest expenses. Number 1. Berkshire Hathaway. Berkshire Hathaway is the last and final Warren Buffett stock you can buy and never sell. There is no stock that Warren Buffett has spent more money on than his own company over the last 4 years. Buffett's preference for cyclical businesses and dividend stocks is what makes Berkshire Hathaway such a reliable performer. Cyclical businesses benefit from the significantly longer period of time that the US and global economies spend expanding. Instead of attempting to predict when these economic downturns will occur, Buffett has filled Berkshire Hathaway's investment portfolio with companies that benefit from the natural growth of US and global GDP over time. Extended bull markets benefit technology, financial, and energy stocks enormously. Furthermore, Berkshire Hathaway is on track to earn $6.07 billion in dividend income over the next 12 months. Income stocks are typically profitable, have weathered previous recessions, and have a long track record of outperformance when compared to their non-paying peers. With Warren Buffett overseeing a 20.1% average annual return for his company's Class A shares over the last 57 years, investors can't go wrong by adding Berkshire Hathaway to their portfolios. That's all for today, and we'll be sure to catch you all in the next one.